Hey everybody, this is Tim Dial with Nexa Mortgage, and I just wanted to put this short video together to go over an update from the markets and what's going on right now. Because there's been some things happen over the past week or so that caused the markets to change some. We were going in a really nice trajectory, and then last night we had Israel attack Iran. And so I want to get into this a little bit and go over what's happening here. I'm trying to make this short and sweet as possible. So as I'm sharing my screen here, as you can see, we had a nice trajectory going here. We went way up here, then we had a really big hit here that brought us back down. This was, I think, last Friday that this happened. And that was because of a new jobs report that came out that was more positive than expected, even though I think it's fake, because the jobs numbers they revised down from that BLS report, they revised the numbers down dramatically after the initial report. It's been happening every single month. So I think they're going to end up with way less jobs created than what they reported, but still it caused this to happen. Well, then we were on a nice trajectory again. We got up above the 200-day moving average, which is where we want to be, because then there's a lot of room for us to move up after we do that. But then last night, Israel attacked Iran. And so as a result of the markets being very concerned about gas prices going up, which causes inflation to go up and things like that, the market took a hit today. So we actually dropped back down below the 200-day moving average, and we dropped down below the 100-day moving average, and we finished just above the 50-day moving average. So, and at one point we dropped below that. You can see this line here. We had come down to here, and then we adjusted back up. So anyway, that's where we sit right now until we have more news that comes out next week. It's hard to say where this is going to go from here, but we're hoping for some more positive news of some sort that can bring us back up above this 200-day moving average, because at that point there's a lot of room for us to grow into this range. This is where we want to be when we decide to start doing these refinances. I do have several people who are kind of on hold right now for us to get into this range to go ahead and do refinances at that point. That's when it's going to make the most sense. I thought we were going to get there next week, but this has caused a little bit of an issue, and it's hard to say if we will make it next week or not. So I'm still hopeful, but we're going to need some positive news before this is going to break back the right direction and get us above this line, which is where we want to be to refinance. So anyway, that's what I wanted to cover. Didn't want to spend an abundance of time on it here, but if you have any questions or comments or need to talk to me about anything, let me know. Additionally, if you are thinking about refinancing and really in a tough situation due to not being able to afford the payments or something like that, then it could still make sense to refinance before we go above this. If you're in that type of situation, instead of waiting, because there are a lot of people right now who could still save like $100, $150, maybe even $200 a month right now. It's just that we might be able to save $250 or $300 if we get up into this range, right? So it just depends. But if you're in that type of situation where you really need to do something as soon as possible to drop your payment as soon as possible, we could go ahead and look at it now, even though we're hoping to get above this line. For some people, waiting's not the best plan. So anyway, that's what I wanted to cover. If you have any questions or anything, let me know. I'm always here to help. Thanks. Bye.